Welcome to the Gold Nugget, a special presentation brought to you by goldseek.com radio. My featured guest today, Gerald Celente from the Trends Research Institute. It's official, the current economic downturn is already more lengthy than any recession since the Great Depression, and with many pundits calling this the Great Recession, it's a pleasure to welcome back Gerald Celente from the Trends Research Institute. Hello, Gerald.
Hello, Chris.
You know, I thought that we could touch a little bit on this latest breakout with the yellow metal. You know, just last week, gold broke through that 1033 number that we'd been knocking at for over 18 months, almost a year and a half. Things look strong, but, you know, there's always the worrywarts out there. I know that you've been a bull on gold for some time. What are your thoughts here?
The speculative end of the market is quite high, and there may be a pullback. As we know, nothing goes straight up or straight down. We still see gold 2000, very firm on that forecast. There is no recovery, although, of course, some 80% of economists believe the recession is already over and expansion has begun. We see it more as a cover-up, and that's why we see gold prices going higher. And the dollar, as we all know, keeps going lower. And the reason it's going lower is that the United States has flooded the world markets with, some $14 trillion into the pipeline to pump up the failing financial institutions. We see the FDIC is, for all intents and purposes, broke. How are they going to protect people's money in the banks if they're asking the banks themselves now to forward loan them for next year? We see that the federal housing, FHA, is in the dire straits, as was Fannie and Freddie, and the FHA is backing virtually all the new mortgages coming out there, extremely high percentage. So we don't see any recovery at all. What we see instead, and looking only at the data, is that the United States is printing phantom money out of thin air, backed by nothing, producing practically nothing. So the dollar continues to decline as the world keeps bailing out of it. China cautiously unwinds its positions from it, and gold prices keep going higher.
You know, I think you really touched on some important bases there, Gerald. First, you talk about the FDIC and a potential, I hate to use the word bankruptcy, with referring to the Federal Insurance Deposit Corporation, but it almost seems like the folks that are supposed to be insuring our banks are facing a bankruptcy. Now, back in the days of the S&L bailout crisis, you may recall that the Congress actually had the power to supply funds to the FDIC. Do you foresee that as a potential scenario if this credit crisis enters a second down leg?
Well, they can do that, of course, but what are they going to be doing? Printing more cheap money. It drives down the value of the dollar, increases the value of gold. And what they probably will do if it comes to that type of crisis, because, again, the FDIC is, for all intents and purposes, broke, they'll probably call a bank holiday. Oh, don't worry about it. Your money's guaranteed. You just can't get it out all at once. And then watch for a devaluation of some sort. So we don't put anything past the government to do anything they can to try to salvage this dire situation.
If the FDIC does get in trouble, I guess they do have the deepest pockets around. I mean, you have the Treasury Department, and perhaps that will be enough just to keep this game of musical chairs going a few more years.
They'll have to print more phantom money, and the world keeps bailing out of bucks. It's always a surprise to me when they come out with these stories, whether it's OPEC or China, the BRIC nations, Brazil, India, China, and Russia, talking about either not taking dollars or doing business in their own currencies, is that is shocking news. So, I mean, they've been saying it over and over again, so the time is going to come. The days of the dollar are doomed. And by the way, this is classic empire failure. It couldn't be clearer in the textbooks. It's fighting foreign wars and draining the treasury. No one ever even talks about that anymore. We're a nation that's following the doom of many nations before, names remembered and those forgotten. You just can't do it. And so they're draining the treasury at every level. So for us, it's bye-bye bucks, and personally speaking, I keep buying gold.
And don't you find it interesting that just last week, the Federal Reserve Chairman Ben Bernanke commented that this loose monetary policy will eventually end. But the markets, they're not buying the Fed rhetoric, this jawboning, if you will. I mean, his hawkish comments proved to be little more, I think, than hot air because, as you mentioned, the greenback continued its slide, and the ultimate indicator of true currency health, of course, gold, well, hitting new highs. So until this unemployment situation, I mean, that seems to be the number that all the traders and hedge fund managers and big money folks are watching closely. It's this unemployment rate. Until we see some consecutive declines there, something of substance, maybe next year or early 2011, this economy will still be in dire straits.
Well, 72% of our GDP is consumer-based. When you look at the effective unemployment rate, the number of people that are no longer looking for work because they've given up, when you look at the people that have part-time jobs, wish they had full-time jobs, the people that are looking and can't find any, the people off the rolls, you're looking at over 17% unemployment. So then they call it a jobless recovery. That's like being almost pregnant. It doesn't happen. And as far as Ben Bernanke, why would anybody believe him? If we had a track record as bad as his, we would have been laughed out of business 30 years ago. Go back, and the facts are all there. Go back to November 2007, a month before the recession officially began. He said there was no recession in sight. The recession was going on in January in 2008, and he said they forecast no recession at the Federal Reserve. And then again, once more, we saw in his appearance to Congress in April of 2008 that the Federal Reserve saw no recession on the horizon. So why would anybody believe these people is beyond me.
So what you're saying is if this gig at the Fed doesn't work out so great for the good professor, certainly he has a career as a hedge fund manager.
Again, it's one person after another. They either ignorant or they're lying. You can't get into people's heads to figure out which is what, but the facts only speak for themselves. I mean, you had guys like Larry Fink, the CEO of BlackRock, where they have $1.3 trillion worth of assets under management. When Bear Stearns went under, he said the market had appeared like a capitulation, and now was the time to get back in for long-range investing. Well, the market was then around 12,000. What is it now? About 9,700. So again, these people are they're con artists or they're ignorant. We don't know which one, but clearly their forecasts have been way off.
So what do you say to folks pointing out that the XAU Gold Stocks Index and silver, unlike the yellow metal, have not reached new record highs? Is this a negative sign from a contrarian perspective?
It's difficult for us to gauge on that aspect. Again, we're only looking at the fundamentals because there are other things going on here outside of the strictly financial sector. As we all know, gold is a safe haven investment for a variety of reasons. On the horizon, there may be some geopolitical shocks that may push gold up very high. They may come from Iran. Pakistan is unraveling. Every day in the news, 40 killed, 30 killed, bomb blast, Afghanistan, Iraq. So we expect more terrorism strikes. We expect the wars in the Middle East to escalate. And, of course, that Israeli-Palestinian time bomb, it's lit, and it's going to explode again. So there are other factors that make for us gold a safe haven investment opportunity.